Hi, my name's Chris Tubby, founder of Trading for Tomorrow, and this is just my weekly macro outlook followed by some chart analysis on products that I trade, just to try and help you prepare for the week ahead. Okay, so let's start with taking a look at last week, and of course we saw PPI surprise coming in hot. But then that was followed on the Wednesday by CPI coming in online, and inflation's still not at that 2%. But despite that, by the end of the week, all the markets were up except for the dollar, of course. Now, when you sort of look at the inflation data and assets pushing higher, it's not a recipe to get inflation back to the Fed's 2% target anytime soon. Then crypto had a good week, spurred on by sort of the meme stocks. Although, I've got to say that the latter just seemed to be a pump and dump for me. Certain word gets out to push the market up. Those people are already long so that they can get out and take their profits. Then, of course, the US equities, they're now up over 27% year on year, and gold 21%. We did see a drop in coffee, cocoa and sugar though last week. Now cocoa's fallen, I think it's around 50% from its highs. Coffee is now up only 10% year on year, and sugar is down about 30% year on year. Ags were up on the week, and oil was down, but sort of held at good support levels. And of course, with all these geopolitical issues still sort of hanging over the market, the risk is to the upside as far as I'm concerned. And just mentioning sort of the geopolitical situation, Ukraine hit a Russian oil depot over the weekend, and of course that Red Sea situation remains unsafe for shipping. Nat gas shot up 50% on the week. However, it's only up 10% year on year. I think personally that's because not so much that sort of demand crept up, but because there was a lack of demand, it's cut supply, which is now sort of balanced, well, almost imbalanced again, because now the supply is outweighing demand's outweighing supply. Sorry. Now, however, that could start to feed into inflation over the next couple of months. And then jobless claims in the US over the last month have risen. I've been adding in my daily newsletter. I just do not see the US economy as rosy as data indicates. For me, it just seems that households are dipping deeper into their savings, or using buy now, pay later to fund their spending. And that employment picture I don't think is as good as it seems as well, because it's being held up by part-time workers. Now, something that may have been missed in the middle of the week when the inflation data was coming out was retail sales. Now, they were flat when they were expected up last month. So that would have been disappointing, but a positive really for the Fed, because if consumer demand starts to drop, that could sort of just hold back inflation and help it to drop a little bit lower. Whether it's going to get to that magical 2%, I really don't know, because the closer it gets, the stickier it gets and the harder to achieve. On the other side, I just think that Europe still seems better placed controlling inflation, and for me it seems as though the ECB are still on track for a June rate cut. I think Bank of England is going to be probably between the ECB and the Fed. Okay, so just moving on to look at sort of this coming week. There's lots of central bank speakers pretty much all through the week. Monday there's a lot from the Fed, and there's inflation data out from other countries this week, plus PMIs. And then watch out for Wednesday after the markets, because the FOMC minutes are released. Well, that's it on the macro. Hope you enjoyed that. It's a couple more slides to come. Hope to see you in part 2 for my chart analysis. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis.